Is this market ready to fall in love with the financial technology stocks all over again? I mean, for most of the year, the fintech cohort roared higher. These companies had nice, consistent growth, and their stocks gave portfolio managers exposure to the financial sector without the risk you'd normally get from actual financials. But in the last few months, fintech has lost some of its luster. And by the way, the banks have really gained it. If the Fed's going to juice the economy by cutting interest rates, that makes the banks more attractive, and that's kryptonite to the fintech stocks. Which brings me to Wex, WEX. It's the corporate payments company that handles fuel cards, travel cards, and even healthcare and employee benefits. Earlier this year, the stock was red hot. Then Wex reported a strong quarter with weaker guidance. We got to go into that at the beginning of August, and then the stock got clobbered. It fell from 218 to 188 in a matter of days. Since then, it's been able to rebound to 208, but it's still well off its highs. So can Wex get its stock groove back? Let's check in with Melissa Smith. She's the chair and CEO of Wex, who's in New York with her healthcare team this week to promote a new initiative. I think it's very exciting. It's aimed at teaching people how to use health savings accounts. Ms. Smith, welcome back to Mad Money.
Thank you.
Good to see you.
Thank you for having me.
Now, I know that you had a presentation and you're doing some unbelievable work with HSAs. And a lot of people say HSA. What the heck is that? Reminds me of when they said that about IRA. What the heck is that? Meanwhile, since then, people have saved $1 million. Tell us about HSA.
Yeah, we think it's really important for people to understand what they're about because it allows you to defer taxes around healthcare payments. So if you have a high deductible plan, your employer probably has an HSA account that they will offer to you. Right. We want to make sure that people are utilizing that because often the employers will put money into them. So think of that as one way of saving. And then on top of that, you defer taxes if you use them for appropriate reasons.
Okay, so why have most Americans been, and you've got some great stuff, why have people don't feel like they are at the center of the healthcare ecosystem and employers don't feel like they have friends and benefits, given that you have an HSA?
I think it's lack of information. And I think people are intimidated around the concept of an HSA and FSA. There's all these terms, and it's part of what we're trying to do with our event is to make sure people are educated. So if you're interested, hsaday.com, we've got information out there on that.
Well, is it something that your HR person at your company has to know about? Or can an individual who is got his own or her own business get an HSA?
They can. You can actually get it through your employer. You actually can get it through, if you look at our partners include Bank of America, it includes HSA banks, or there's a number of other providers that you can go to outside of your health insurance provider.
Okay, Melissa, how much does it matter? I mean, for instance, health and employee benefits was $83 million recently, unbelievable growth in second quarter 2019. Can you get that to be one of the largest pieces of your company?
It's about 20% of the overall profile and growing faster. So we do think that it will continue to, if you look at the mix of the business, it's going to skew towards the things that are outside of fleet over time. Okay,
the reason I mention that is that the analysts tended to think, I saw this in a couple of notes, that your travel and corporate solutions business had gotten just a tad slower with a high multiple stock. That obviously was a ding. Is it any way to be able, I know you're inquired about the quarter, but can that pick up, or was that just the analysts being too nitpicky?
The 21% growth we had in the quarter, we felt pretty good about that. I think if you look at the kind of the trends around a lot of what we're seeing in business volume, the volume is off just a little bit. I'd say kind of across all of our different industries compared to what we've seen historically, and that's part of what we're experiencing is a little bit of softness just in terms of same-store sales and what you're seeing in growth. They're still growing. 21% is still a good growth number, but it's a little bit softer than what we've seen.
How about the Chevron and Shell deals? What do they mean for you?
Yeah, so Chevron and Shell, they're huge. They are about 7% of our overall fleet volume just in those two contracts. And so we implemented Shell in Q1, Chevron Q2, and seeing the benefit of that now.
Just in case there are people who don't know exactly what I mean when I say the Shell and the Chevron, can you walk people through, because it's incredibly important in how much it saves companies, but it could be a great opportunity to buy the stock of Wex. It would help people to understand that.
Sure. So what the oil companies have done is outsource their commercial card portfolio. So if you're a business and you want to have a product to use to pay for your fuel associated with the brand, then we are often the backbone associated with that. And both Shell and Chevron decided to outsource everything from sales marketing all the way through credit collections. Think of that as kind of the whole scheme, including the technology to us.
Well, that's terrific. I know you've grown this company tremendously. One last thing, HSA, I want people to understand this. So They want to go to their PC and do what?
HSAday.com.
HSAday.com.
HSAday.com. Yes.
And it's got the Gene Chatsky, my old friend, and you moderating.
She's fantastic.
All right, great. Thank you so much.
Thank you so much, Jim.
Okay, that's Melissa Smith, Chair and CEO of Wex, W-E-X. You don't see them. They're behind the scenes, but they make a lot of money. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.